Kevin Warsh was just confirmed as the 17th chair of the Federal Reserve. The Clarity Act is being marked up in the Senate right now, and Bitcoin is sitting right on the 200-day moving average, the same level that's launched every major move in the last 3 years. All of this is incredibly bullish. But today I want to show you something underneath all of it, a law of nature. The same mathematical pattern that governs how cities grow, how organisms scale, and how networks compound in value. Bitcoin is the only financial asset in history that follows this law, and it's the reason $1 million per coin is inevitable. Today I give you the clearest explanation of the Bitcoin power law that exists on this side of the internet, and once you see it, you will never look at the price the same way again. This is Truth Block, I'm Hurley, let's mine truth. Now, before we dive in, I just want to let you know that we're building something really exciting at Simply Bitcoin that you won't want to miss. Scan the QR code below or visit news.simplybitcoin.com/launch to learn more and be one of the first to see what's coming. Now, I want to be upfront about something. I resisted the power law for a long time. I mean, a lot of Bitcoiners did. The truth is, many of us got burned by the stock-to-flow model last cycle. The price targets came and went, and the model broke down. And a lot of us walked away from anything that looked like a mathematical price prediction with deep scars. So when people started talking about the power law, I kept my distance. It's just another model, another set of numbers people would treat like prophecy. It took a friend sending me a video about power laws in nature to start to crack the door open. And once I started looking at the data and what an Italian physicist named Giovanni Explains has been publishing, I realized that this isn't a price model, it's a description of what Bitcoin actually is. Now, Giovanni is a polarizing figure in the Bitcoin world. He's the director of the Scientific Bitcoin Institute, and he's done serious peer-reviewed work on this. He's also gotten into some ugly spats online with skeptics, and I think some of that probably traces back to the model allergy I just described. But his work stands on its own. First, to understand what a power law is and why it matters for Bitcoin, we have to start with a question most people have never thought about. What kind of growth are we looking at? Most of us think about growth one way. Something goes up fast, peaks, then comes back down. Think a hot stock, a housing bubble, or a startup that scales until the market saturates. That's called exponential growth. Bacteria in a petri dish double and double until they run out of food, and then they die. Exponential growth has a built-in death sentence. Eventually, the system runs out of room. A power law works nothing like that. Think about a city. New York didn't double its population every decade until it exploded and collapsed. It grew fast early on, then slower still, but it never stopped. And the bigger it got, the more productive it became. Double a city's population and you get more than double the patents, the wages, and the innovation. Cities get more efficient with size, not less. That's a power law. Growth that slows over time but never stops. And the bigger the system gets, the more resilient it becomes. So the question we should ask of any system is, what kind of growth are they running on? Because one of them dies and one of them doesn't. Now, Giovanni was on Coin Stories with Natalie Brunell recently, and he lands this part really well.
With Bitcoin, we have this beautiful process that is the process that is chosen by nature, and also things that kind of human construct that grow from the bottom up. Like, for example, a city, right? A city is organic. People interact with each other. Yes, there is some planning, but it's not very strong. And in fact, one of the things that you learn from the power law that you should not do much of central planning. Let things organize themselves, and then the natural exchange of information and knowledge, etc., creates this process. This is what happened with Bitcoin. It's a bottom-up process that self-organizes, and it chooses, for whatever reason, the path that nature likes. Like, for example, there is another article that I mentioned in the book, and it's a comprehensive article that studies the growth of teeth, horns, shells, thorns in plants. All of them grow as power laws.
Wow.
So it's what nature likes. Now, do you know what in nature some of the bad processes are? Exponential, like cancer, for example, is an exponential. Cities are eternal. You take Rome, right? Rome has been existing for thousands of years, right? They have cities like Hiroshima and Nagasaki that are being nuked, and now they are rebuilt and they are very thriving cities, etc. It's very difficult to kill a city,
right?
And they all grow as power laws.
But corporations are
Corporation
exponential.
is studied a corporation as an example, and then they grow exponential. And he says, he has a joke, he says,
a lot of them
there are no corporation that maybe there is only one exception, that is the Vatican, that makes a joke, that as a corporation, right? That has existed more than 150 years.
Wow.
Almost all of them die within 150 years because they grow as an exponential, and then they don't have any other resources. They run out of resources and they die. Their market is not is saturated by their products, and they have some other competitor, and they die.
But what does that mean for corporations that are backed by Bitcoin, essentially? Could they live forever?
Exactly.
Could strategy live forever?
Exactly. So this is one of the reasons why I want Saylor to start adopt this language of a power law, because he could say exactly that. He say, we are turning corporations into cities.
Which law a system runs on determines whether it lives or dies. Bitcoin is running on the same math as cities. So when someone says Bitcoin could go to zero, they're saying Rome could go to zero. And companies holding Bitcoin on their balance sheet like Strategy, they aren't just buying an asset, they're changing which law governs their survival. From company to city, that's what the math does. Now here's another way to see how power law systems work. Imagine a forest. Trees grow, lightning strikes, small fires burn and clear out the dead wood. More trees grow, more small fires. The system regulates itself. No one is managing it. No one is deciding which trees burn and which don't. The forest finds its own balance through constant small corrections. Now imagine someone steps in and starts suppressing every fire. No more small burns. The dead wood piles up. The fuel accumulates. And when the fire finally breaks through, and it always does, it doesn't clear a patch, it takes the whole forest. That's what the Fed does with the economy. They suppress every small recession. They bail out every failure. And the imbalances just stack higher and higher until the system can't hold. Bitcoin is the forest that no one controls. The difficulty adjustment recalibrates every 2016 blocks. Miners come and go. Hash rate rises and falls. The network absorbs it all and rebalances all on its own. The system tunes itself, the same way forests do, the same way power law systems always do. It's called self-organized criticality, and it's one of the deepest signatures of a power law system. Giovanni took 15 years of daily Bitcoin price data and plotted it on a log chart. If Bitcoin followed an exponential, the line would curve. If it follows a power law, the line is straight, and it comes out a straight line. In this formula, price equals time raised to the power of 5.7. That single equation explains 96% of Bitcoin's entire price history, from pennies to six figures, across 6 orders of magnitude, through every crash, every bubble, every regulatory crackdown, every exchange collapse. The line holds. And this is where I stopped being skeptical, because Giovanni didn't just find a line that fits the data, he derived why it fits. The exponent 5.7 isn't arbitrary. It comes from 2 things you can measure independently. First, adoption. Bitcoin addresses grow over time at roughly the rate of time cubed. That's the same rate as how the internet and Facebook grew. It's the natural pace of a technology spreading bottom up through a network. Second is network value. Price scales with the number of users raised to about the 1.8 power. This is a version of Metcalfe's law. More users means more connections, and more connections means more value. Multiply those exponents, 3 times 1.8 gives you 5.4. The directly measured value is 5.7. They match it within 2%. The power law isn't a curve that someone drew on top of the price. It falls out of the physics. Adoption times network value. That's it. Giovanni actually tested this against Saylor's claim that Bitcoin is exponential. He ran 5 models against 15 years of daily data. Saylor's version is an exponential within a decreasing rate. When you let the data choose, it collapses right into the power law. Saylor's model, fit honestly, is the power law. And his instinct is right. The growth is slowing. The power law just tells us how and why. Exponentials slow down and die. Power laws slow down and endure. And this connects to something we covered a few weeks ago, the Saylor curve. Plan C's logistic model that traces every one of Strategy's Bitcoin purchases with stunning precision. That model is real, but it sits inside the power law. The Saylor curve is bullish noise within the Bitcoin signal. The power law is the climate. Strategy's accumulation, the ETF inflows, the nation-state game theory, that's all weather. It's important weather, but the long-term trend was set before any of them showed up. And once you see that Bitcoin follows a law of nature, the game theory of adoption stops being speculation. Nations and institutions and corporations aren't choosing Bitcoin because they're visionaries. They're choosing it because the system is selecting for it. Game theory is just the mechanism. One more piece. Saylor noted at Consensus 2026 that Bitcoin's volatility has marched from 80 to 40 over 5 years and is pointing towards 35. Giovanni's work explains why. In a power law system, volatility decays over time because it's built into the math. Lower the vol means bigger allocations can enter. The power law is engineering its own adoption curve. Every mainstream criticism of Bitcoin assumes it's an exponential. It's a bubble. It's a speculation. It's a Ponzi. All of these things grow exponentially. They go up fast, they peak, and then they die. Here's Giovanni on exactly this.
If you can simplify this message, and because it's not a poetry, it's science, actually,
Right.
It's based on data and the science, to me is like one of the most convincing orange peeling argument that you can make, right? To people that, no, it's not this. It's like when people say it's speculation. Absolutely not. Speculation will not grow. Usually speculation like bubbles and other things like that, they grow exponentially, the opposite of a power law. Power law is self-regulating, right? With this slowing down of things. There is something deeper there. It's the network quality of a system. And, okay, everything else is different from Bitcoin because it's not speculation, because it will not grow as an exponential. It's not a pyramid scheme because also that grow as exponential. All the things that it does have value because it's finding value not by people imposing it from outside, but it finds it by itself by growing through adoption. So I think it's beautiful. Once you understand it, there are a lot of consequences.
Yeah.
We are adding a very important story to what Bitcoin is.
Every attack on Bitcoin maps to exponential growth. The data says power law, and power laws don't die. They self-regulate. They find value from the bottom up, not because someone decided, but because the network discovered it on its own. And the climate has always been on our side. The power law has held for 15 years through wars, 90% drawdowns, exchange collapses, China bans, regulatory crackdowns. It's never broken. But the weather right now looks unusually good. Here's Saylor at Consensus rattling off the near-term catalyst list.
There's a global consensus. Bitcoin is real. The tailwinds for Bitcoin or the catalyst will be a cessation or a resolution to the Gulf War, the installment of Warsh at the Fed, any loosening or any forward accommodation in the interest rate monetary policy, and then any positive developments in trade, right? And all of those are positive catalysts. And then the passage or resolution on the Clarity Act, right? When we get a resolution there, those will be positive macro factors for Bitcoin.
So let's check that list against what's actually happening. Gulf War resolution, a ceasefire is in effect, and negotiations are underway. Warsh at the Fed, he was confirmed yesterday. Monetary accommodation, the bond market is screaming for it. 30-year yield is above 5%. Trade developments, tariff pauses is in play, and Trump is currently in Beijing with top tech leaders like Elon Musk and Jensen Huang, and they're there to make a new deal. What about the Clarity Act? Well, it's being marked up in the Senate right now. The power law tells you something these catalysts can't. It doesn't matter which of them hit first. It doesn't matter if some don't hit at all. The power law held through every storm for 15 years. It held when none of these tailwinds existed, and it's still holding now. Okay, so let me bring this all together. Jeffrey West sees the problem we're all in more clearly than almost anyone. He wrote a book called Scale that's the definitive explanation of power laws in our world. West has the math. Systems like fiat money approach what he calls a finite time singularity. Each innovation cycle has to arrive faster than the last to keep things from collapsing. Mainframe to desktop to internet to mobile to AI, the gap keeps shrinking. West's diagnosis is rigorous. His prescription? Better leadership and cultural change, which he admits is thin. Us Bitcoiners know the answer isn't a better leader. It's a better monetary system. You can't manage your way out of a mathematical singularity. You need a paradigm reset, and lucky for us, it already exists. Every other financial asset follows an exponential. They grow fast, they peak, and then they die. Bitcoin is the first to follow the same law as cities and organisms and networks. The law that says slow down, stabilize, and endure. And if you're in a power law world, the strategy changes. You don't trade it. You don't time the cycle. You stay persistent, which means self-custody and long time horizons. Don't trade a law of nature. And I actually think this is why Bitcoin conviction looks religious from the outside. Because when you see that Bitcoin follows the same patterns as biology, as the growth of cities, as the fundamental architecture of how networks scale, you realize the people who've done the work aren't running on faith. They're running on pattern recognition. And the deepest kind. And this is why $1 million per Bitcoin isn't a dream. It's where the math and physics point. Okay, questions for you. Does the power law change how you think about Bitcoin's price? What's the hardest part about explaining Bitcoin's inevitability to someone who still thinks it's pure speculation? And if Bitcoin follows a law of nature, does that make you a more patient or more aggressive accumulator? Drop your thoughts in the comments below, smash the like button, and if this episode helped you see what's underneath the price, share it with someone who needs to hear it. And make sure you're subscribed to Simply Bitcoin so you don't miss the next one. Have a great weekend, everyone, and I'll see you Monday.